Good evening, students. Welcome back. So today we are going to start with this another topic, which is about audit evidence. And in respect of the audit evidence, uh, some of these auditing standards we plan to cover. SA 500, SA 501, which is primarily in relation to the responses to the assessed risk, you can say, which talks about the audit procedures the auditor will perform. Particularly when you talk about SA 501, it covers certain situations, some of the specific items as to how do you really get onto the audit procedures in respect of that. SA 505, again, when you talk about external confirmation, it's nothing but an audit procedure. Yeah, but it happens to be quite critical in respect of certain areas. Now, what are those areas? We'll talk about that. Audit sampling is, you can say, one of the approaches in respect of performing these procedures, right? Then, if you talk about related parties, SA 515, again, considering the nature of this item and irrespective of the size, irrespective of the industry, this is generally considered to be a quite an important area. Okay, and most of the times you'll see these related parties to be the significant risk as well. Yeah, so that's why it becomes very important in terms of the planning as well, and of course when it comes to the execution of the procedures which the auditor will have. And then of course we have this auditing standard which talks about audit of opening balances. Now, how do you perform that? What is required to be done? And as regards this audit of opening balances, there's a lot of confusion. Okay, means what do you do that required to be done, if at all this is required to be done or not. Yeah, so that's where you can say a clear cut plan should be there on the part of the auditor when he actually performs the audit. Okay, when he is actually beginning to, you can say, he is actually beginning to perform the audit procedures. Okay, which is more about the execution stage, or you can say field work, right? Now let's try to understand some background about this audit evidence. And then of course, we'll move on to some of the specific requirements of audit evidence. Now, when you talk about audit evidence, basically, if we go back to the objectives, okay, with which this audit is required to be performed. Yeah. Now that's where you understand that audit involves performance of certain procedures, or you can say obtaining or getting onto a situation wherein the auditor will have reasonable assurance, right? Now, as regards this objective of the audit, right, what do you find? That the auditor is required to obtain sufficient appropriate audit evidence. Remember? Yeah. So that's the requirement you see in respect of audit evidence. So when you talk about audit evidence, we are just trying to understand the background of this. Now, what will comprise of audit evidence? What all things you will do? So that's something which will be dependent on the areas which will audit. So for example, for inventory, what do you do? For revenue, what do you do? Yeah. So all of those are very, very specific to the areas that are audited. Now, as regards the audit evidence, auditor will always want to achieve two things. It has to be sufficient and appropriate. Right? So it has to be sufficient and appropriate. Now, what do you mean by sufficiency? And what do you mean by appropriateness? See, when you talk about sufficiency, so basically we are talking about the quantity. And when you talk about appropriateness, so therein we are talking about the quality. Yeah, so we are talking about the quality. Yeah. Say for example, a population has been picked up. Let's suppose it's about the audit of sales. So you have taken the sales dump, and let's suppose there are some 2000 line items. Now the question arises, how many samples you select? So I'm not talking about the sampling here. I'm just talking about the audit evidence, because the samples you select, the audit that you do in respect of those samples, what do you call it as? That's nothing but the audit evidence. Yes or no? That's nothing but the audit evidence, right? Now, in relation to such audit evidence, another aspect which is required to be checked. So say you select 125 samples. Now again, this is only an example. I don't think about it. Why do we select 125? So let's suppose 125 have been selected out of 2000. Now, in this case, another question arises that, okay, 125 is about the count, but which one? Out of this 2000, which are which samples are going to be those 125 samples? Okay, so that could also be a consideration for one to look into. Yeah, so that is what you talk about appropriateness. Yeah, so now when do you really get into this audit evidence? Now, if you go back to the discussions we have had, so we discussed few cycles you'll see in case of an audit. What was that? Planning. Okay. Then we have this execution. Yeah. Planning you'll have, then you'll have execution, right? And once you complete the execution, or while completing, you will draw the conclusions, basis which reporting will be done. Yes or no? Yeah. So now, when you talk about audit evidence, so actually, this entire audit process, you can say everything that you do in case of an audit becomes what? That's nothing but the audit evidence only. Yes or no? But very specifically, if you talk about this execution, okay, now that's where you go to the field work. Sorry, you go to the field, means you are going to the company's premises, client place. You are performing various procedures, which could be in relation to inquiries, which could be in relation to examination. Yeah. Now, all of these procedures that you perform, now what are those? Those are nothing but execution. So actually, that's execution. And while you execute, while you perform the procedures, okay, while this field work is performed, so the information that you collect, the verification that you do, the documentation that you create, what is that? That's actually nothing but the audit evidence. Yeah. So understood what cycle of the audit we are talking about here? Yeah. Now this part is important. In fact, extremely important for one to understand. Why? Because for us to have a clarity, what is required to be done is the foremost term. Why? Because how is that required to be done will of course be understood. That will of course be discussed. But before that, you need to understand what is required, and of course, that is when you get onto the how that is required to be done, or how will you perform a particular procedure. Okay, so that's where we need to understand as to what are the elements you'll always be considering when it comes to the audit procedures. Right now, talking about this SA 500. Now, when you talk about this audit evidence, so as we just discussed, what is this audit evidence? It's the information used by the auditor in arriving at the conclusions. Okay. So basis this evidence, what are you doing? Or the information, what are you doing? You are drawing the conclusions. Basis which you will get onto the reporting. Okay. Now audit evidence includes both information contained in the accounting records, means a lot of documents that you receive, or let's suppose you create in terms of the work papers in relation to the financial statements, means something which is in relation to the numbers. Plus, there are various other documents that you collect. Say the minutes you'll obtain, okay, inquiries you perform, processes you understand. Yeah. So all of this will become what? All of this will actually be nothing but the audit evidence, right? So that's actually nothing but the audit evidence. Clear? Now, in relation to the audit evidence, we have understood what is the information you will collect, and which all information you collect will become part of the work papers, and both of them in a way, the information that you collect, the work papers you create, in a combined manner. Now, what do you call it as? Audit evidence only, right? Now, in relation to the audit evidence, now the next question arises that what if there are some critical areas, or which are generally considered to be critical? Okay, so generally those areas are considered to be important, critical. Now, if let's suppose as an auditor, you come across those areas. So what do you do? How do you go about it? Yeah. So how do you perform the procedures on that? So now as a part of SA 501, we will try to look into those areas. Say inventory, then of course you have litigations. Okay. And then this segment information. All of these considered to be extremely important. Right. Now, what we will do is, now we will talk about inventory. Now, as regards inventory, see, if you talk about some of the companies which are into manufacturing, okay, and different industries that you consider, you generally find inventory in the financial statements. Now, inventory is one area just which if at all you find that in the financial statements. So we'll consider that to be generally important. Yeah. Now, why is that so? One, if you look at this item inventory, okay, and wherever you find this item in the financial statements, okay, so you will generally find this is of a significant amount. So you can say in terms of amount, I'm saying generally, you will find this amount area to be significant. So that's one. Now, during the course of planning, when the risk assessment is done, so that is where this area generally commands, you can say, higher risk in terms of the assessment which the auditor will have done. It's generally considered to be a riskier area. Okay? And that's why what will happen? If let's suppose you have significant risk involved in a particular area, for various reasons you may have. So what will happen? Extent of testing will go up. So that's what we understand, that on the significant risk areas, you will generally see extent to be higher. Correct. Now, this extent that you find could vary from entity to entity, again, depending on the nature of business. Then this could again be dependent on the amount involved. And of course, this will always be dependent on the risk assessment which the auditor would have performed. Okay, because that's in fact one of the most important considerations you get to see. Now that's where one item, or you can say one particular procedure, is generally considered to be extremely important in respect of inventory. Now, whenever we have to audit any area, Okay, and I'm actually talking about the execution. Okay, means when we perform the substantive procedures. So how do you go about it? So look into the assertions. Yes or no? You look into the assertion, right? Now, when you perform the procedures, your procedures are again going to be assertions based. Now, if let's suppose we talk about one assertion, which is existence. Yeah, so if let's suppose we talk about existence as an assertion, right? Now, in this case, what do you do? How do you go about it? What are the procedures you will want to perform? So that could be a so no, that could be a consideration on the part of the auditor. Now, how do you really go about it, performing the procedures? So now, if we think about it, if we think about it, think about it. For the existence, only one procedure seems accurate. You can say there's one way you can just take care of this assertion related to existence. And what is that? What is that? That will be the stock take. So now considered to be a very important area. So whenever an audit is performed, you find physical verification being performed by the auditor. Now, what do you mean by physical verification in such a case? And how do you go about it? And what do you go about it? See, what is your objective over here? Your objective is to verify whether the inventory actually exists or not. Yes or no? That's the objective you are working towards. Whether the inventory actually exists or not. So that's the concern. Let's suppose you have an auditor. Now, how do you perform that? How do you go about it? Just think about it. Yeah. So what do you do? So in such a case, for you to verify the existence, you will have to perform physical verification. And this physical verification is considered to be an extremely important procedure. Okay. Considered to be extremely important procedure. Now, when is this physical verification performed and who performs this? Now, again, let's go back to the structure that you'll have. See, when the financial statements are prepared, when those are presented, who has the responsibility for doing that? It lies with the management. Okay. Now, similarly, if let's suppose one has to look into the inventory, so it's the management who will be doing the physical verification. Yeah. At least in a year, the management will always be doing. In fact, you also have a specific reporting under CARO for this. Yes or no? Now, what is going to be the role of the auditor? Auditor is actually participating in the physical verification with the management. Yeah. Now, there again, will the auditor perform 100% verification? Answer is no. Auditor is not going to do that 100%. Yeah. And in fact, that's where what the auditor will generally do is something that you call as ABC analysis, wherein A is the high value items, okay, C is the low value, right? C basically is about the low value, right? And B is the medium category there. Now, in this case, the focus will always be on the high value items. Why? Because if let's suppose by looking at the high value items out of this entire population, say a majority chunk is covered. So what will you do? You will always want to focus more on that. You will always want to cover more of these A category items. Does it mean you will ignore B and C? No, you will cover that. Yeah, because coverage is important. But of course, if let's suppose you are leaving out low value items, or even if those are missed out, that's not going to impact. Yeah, but you anyways are not missing out on that completely. You are including that in your sample as well. Because as far as the process is concerned, that's how you'd want to get a comfort on that. Correct? Now, when we talk about this physical verification, now the next question arises, when does the management perform this? So this is basically the approach. You can say that this is generally the approach you'll see. Okay, ABC analysis will be done, right? But when do you go about it? Now, say we are looking at the financial statements for the year ended 31st March 2026. Right? Now, in this case, what will happen? Inventory being a balance sheet item, what do you do as a company? Closing balance of the inventory will be correct. Now, as an auditor, what do you want to check? Let's suppose the company has shown inventory of rupees 80 crore. So the auditor wants to check whether the amount, whether the inventory, which is amounting to 80 crore, actually exists or not as at 31st March. Maybe on 29th March, it was 100 crore, or say it was 50 crore. Why? Because the acquisition may have taken place after that. Yeah. But for the balance sheet, what do you go? Oh, sorry, what do you go and check? You actually check as to whether the item physically exists or not. Correct? Okay. So that's how you need to go about it. That's how you need to get into it. Right? Now, in this case, is it performed on 31st March? No. So it may be performed near and say on 30th, 29th, say on 1st of April, 2nd of April, first week of April. Again, let's suppose the inventory size is huge, and if you are not able to complete that physical verification in a day, so it may stretch to 3 days, 4 days at times. The company may be multi-locational. Okay, so there are various locations at which the inventory is placed. So in such a case, you'll go look at various locations. Of course, not 100%, but different locations you cover. So that's why to complete that in a day, and that too as at 31st March, practically you don't get to see in most of the cases. So that's why it's near around 31st March. Okay. Now what is your objective? To check whether inventory physically existed as at 31st March. Yes or no? Now, let's say you perform this procedure on 10th of April. Now, physical verification, which you have been able to check, is on 10th of April. Now, in this case, what do? You will do a, you can say, sort of backward calculation, which is very commonly referred to as rollback procedures. Okay. Now, in this case, what will happen? Let's suppose if you go audit, do physical verification, and in terms of the quantity, you will check. So, of course, you will not be able to check the amount. You will be able to check the quantity, and that is actually your objective, to check the quantity. Okay. Now, whatever quantity you want. So, what do? During this period of 10 days? Any increase, decrease which might have taken place. A new inventory was purchased. Some of those items were sold. Some of those items were also converted. So how do you check? Through these rollback procedures. Okay. Similarly, say instead of performing this physical verification on 31st March, say it's performed on 28th of March. So what do you do then? Okay, say it's performed on 28th of March 2026. Now in such a case, what do you do? Now similar to what you do in case of rollback, now you'll have to roll forward, right? So you will roll forward to what? 31st March. Okay. So anything you would have checked on 28th March. So basically you are trying to reconcile that. Okay. Now, when the physical verification is performed, okay, so over there you will find that two approaches which the auditor will generally follow. I'm not talking about the time frame now, I'm talking about the approaches. Something that you call as shop to floor. Okay. Let's suppose this is your inventory list. Now you have the inventory list available, right? So what is one of the ways? You will go in the inventory list, you will mark some items. Okay, so let's suppose you have marked this one, so this one, to be physically. Let's suppose this is what you have marked, right? Now in this case, what do? Now these items will go and check physically. Okay. And if let's suppose they match, that's fine. So there can always be shortage or excess, right? So that's a possibility. There can be a shortage or there can be an excess. Yeah? So that's a possibility. Correct. There's another approach which the auditors are supposed to follow, and what is that? Flow to sheet. Now, instead of selecting the samples from the sheet, what the auditor will do is auditor will say, pick up some items which are there on the floor randomly. Okay. Now, for some of those items, auditor will then check. In its inventory list as to whether those items are appearing in the inventory list. Because maybe there are some items which physically exist, but those are not captured in the inventory list. Yeah. And it can always be vice versa. So these are the two approaches you follow for the audit of, or you can say for the physical verification exercise. Okay. Now, talking about this physical verification further. Now, sometimes this physical verification may be quite technical. Now, over here, when we are discussing about physical verification, so it might appear to you that it's all about going and doing a count. Yeah. So you go perform a count, you go check as to how many items are there. So no. And whether the items whether the items are physically existing or not. Now, in terms of the technicality involved, it may be difficult to actually verify the inventory physically. Say, if let's suppose, if you talk about cement, and sometimes the way the inventory is managed may also make the physical count slightly difficult, or you can say challenging at times. So again, it may vary on the technicality, but we are talking about the technicality part more here rather than the challenge. Because when it comes to the challenge, of course, that's a concern. But that's not something which will involve a technicality as such, right? Now, sometimes because the nature of the inventory is such that it's not possible for the auditor to go physically verify it. So in such a case, what do? You will first of all discuss, understand from the management the technicality which is involved. Yes or no? You will understand that in terms of the technicality which is involved. And basis the technicality which is involved, then of course you will want to check as to whether there are some experts from the management side can help you, or who have been helping the management on this. Why? Because primarily who is responsible for this? It's the management only. Yes or no? So they are the one who are responsible for this. So how do you actually go about it? How do you get into it? So that's again one of the considerations you will have. Correct. Now, In this case, at times, auditor may find a need, and that is something again which will form a part of planning as well. Okay. And something which would have been evaluated by the auditor at stage of planning in most of the cases. And that is about use of an expert. Now, this expert could be the management expert. If let's suppose auditor is planning to use his own expert, which you call as use of an auditor's expert, right? So management must have involved there for sure, right? Because the technicality management would have also considered, and they are also not expert on those areas. In fact, for each and every area, correct? Now, that expert will go help the auditor in terms of the physical verification. Okay. So this is at times you see forming part of the physical verification itself, right? Now, let's suppose this physical verification has been performed. Okay, the way it was required to be done. And some of these areas, some of these considerations we have looked at. Now let's talk about the outcome. So what could be the item? You go physically verify and you find it's absolutely okay. In most of the cases, it will not happen. Yeah. And that's what you call as difference, or differences might be there. Correct? Now, what do you do about it? See, whenever you come across such differences, so as a first step, what should you do? Go ask the management. Correct? Go ask the management in relation to the reasons. Maybe the author needs some more understanding. Okay. Management is able to make the auditor understand, give him a perspective which was missing. Okay. Basis which auditor may have thought that there's a gap which may actually not exist. Correct? And at times, reconciliation may be required. Maybe there are some gaps in terms of how the inventory physically exists and how that is actually accounted for. Right? So that's also one of the things for the auditor to look at. Correct? Now, if at all there are reconciliations, now all of these situations you find generally there. Generally, you'll find these situations. Now, as an auditor, what do? You'll have to look into all of these things. So all of these will form part of the evaluation as to how these have been evaluated. What is the outcome after considering these, you can say, factors as well. And accordingly, the auditor would have to evaluate as to whether there is any sort of difference or not, means in terms of the misstatement or not, whether there is any statement or not. Okay, so this becomes important, right? Now, when it comes to the inventory, see in inventory, as we discussed, so this area in itself is quite important. Physically, as we discussed, it's a very important and practically you find this to be a critical area, okay, in most of the situations like this. And even in relation to the inventory, one area which happens to be extremely important is what? Physical verification. Why? Because as regards the assertion that is existence, there's only one way to go about it. And what is that? Physical verification. Okay. So that's why physical verification is considered to be an important area. Yeah. Now, other than this physical verification and other than this, if let's suppose we have to talk about various other assertions, which could be in relation to valuation, which could be in relation to accuracy, right? Rights and obligations, disclosures. Yeah, so there again, you'll have various audit procedures to be performed. Say when it comes to the valuations, what do you do? Valuation which the management would have prepared. So you'll verify that as to whether that valuation is in line with the requirements of the accounting standard or not. Many a times, the costing, the basis which the management may have considered, right? So you want to evaluate that. Yeah. Now, inventory is one area you can say which is also linked to the purchase, procurement. Yes or no? Because anything which the company would purchase will go to inventory only. Yeah. I'm saying the purchases of raw material, or let's suppose if the company is into the trading, so the traded goods. Yeah. So that's why this is also linked to purchases. Or you can say some of the areas you perform in relation to the purchases will be leading you to this part related to inventory. Yeah. Next. Now what we will do is now we'll move on to another area which you call as litigations. Okay. So let me just get on to that document. So I'll just come back to yeah, so there we go. So inventory is what we just looked at. So now let's talk about litigations. Now, what do you mean by litigations? How do you really go about it? What are the things you'll consider? So let's take an example. Litigation basically could be in respect of any item, but you can say any area or any matter in which the company may be having and which may have some impact on the financial statements. Okay, now, so the company has some litigations in respect of GST, income tax. Yeah, very commonly you find these. Okay. Similarly, sometimes there could be some matters which are impacting the industry as well. Right? Which could be pertaining to some rule or regulations which is impacting the organization. Now, when you talk about litigations, now one area which becomes extremely important, and you can say here again, when assertion, which becomes extremely important as compared to the other. Now, for the litigations, for the claims, let's suppose if you were to go and check the details. So what will you do? You'll have inquiries from the management. You'll have inquiries from the relevant teams. So the tax teams in-house, which might be there. Company may also have some external consultants, attorneys at times, who are representing the company in respect of those matters. So what do you want to check? You want to check the outcome. Yeah, because that will have an impact on how these litigations and claims are recorded. So the company during the year has you can say these are the matters, right? Company has also discussed with the auditors. Company has done the analysis, recorded that appropriately in financial statements. Means any disclosure, any recognition which was required, company has done that. Okay. Their evaluation at times could be quite challenging. A lot of judgment may be involved. And here again, use of auditor's expert is generally considered to be extremely important. Yeah, generally, that is considered to be extremely important. Yeah. But let's think about a situation. Yeah. Say there are three matters. Against which there's some litigation. Company has not recorded that anywhere in the financial statements. Those have not been discussed with the auditor. How will the auditor identify it? Yes or no? So that's the risk. So this completeness is one assertion. Which is extremely important for the company to look at. Right? Completeness. Now, how will the auditor perform this? Or how the auditor will go about ensuring the completeness? So that's what auditor will want to check. You can say this should also be a focus area. This is something which is provided to the auditor already. May have some challenges, no doubt. But a situation which is all the more different and difficult for the auditor happens to be the one that we just have. Why? Because in such a case, there is a risk that some of these litigations may exist which may have an impact on the financial statements which the management has not considered, and the auditor has also, let's suppose, ignored that. Yes or no? So that's a bigger risk as far as the audit is concerned. Correct? Now, for this completeness, what will the auditor do? Auditor will reach out to the consultants, you can say attorneys, lawyers, of the company, asking them to confirm in respect of the matters which might be there in respect of the company which are being handled by those parties. Right? So that's why you can say there's some sort of external evidence auditor is trying to obtain, which is also in the form of a confirmation, but confirmation is one area that we'll talk about separately. Okay. And then, of course, other than the legal attorneys, another one which is about the scrutiny, examination of one account ledger, something that you call as legal and professional expenses. Now, that's what the auditor is required to look at. Yeah. Now, through the examination, what the auditor may get or the scrutiny, this ledger. So generally, this is considered to be an important ledger. Auditor will get to know. Let's suppose some consultation fees are paid, some uh, or any expenses incurred in respect of some of the, say, challans or duties, okay, which are litigative on the part of the company. So auditor can always inquire from the management as to, why these amounts are being paid and what are the matters corresponding to this. So at least the auditor will be able to do some sort of procedures to ensure what. So the objective here is what? Ensure completeness. Right? So it's all about completeness. Yeah. Okay. Now, third area, and that's what we looked at. That file as well happens to be what? Segment information. Now we have an accounting standard on this, okay, which requires segments to be identified by the management first. Now, if you look at it from the perspective of financial reporting, right? So now, as an auditor, what do you go and check? You will check that management has recorded or management has put down this information in the manner it is required by the accounting standards. Right? So that's where this entire process of the management in relation to the segment requirement. That's something which the auditor will want to get into, look into, understand. Yeah, because that will provide the auditor a clarity as to what is really required to be done in that case. Yeah, because if something is missing, so how do you really go about it in doing that? And in terms of the process of the management, whether that process is aligned with the accounting requirements that we have. Yes or no? So both these factors therefore become important. Correct? Yeah. So very, very important on the part of the entity to look into this. Yeah. Now, moving further. Let's talk about another very important procedure, something that you call as external confirmations. Okay. And in fact, this related party to a certain extent will also require the application of this procedure. External confirmations also. Now, what is an external confirmation? What do you do in that case? And how is this procedure performed? And what are the areas in the financial statements wherein wherein this procedure of the external confirmation becomes important? Okay, so that's what we are now going to look into. External confirmations. If we look at certain items, say debtors, similarly banks, okay. Similarly, if you talk about borrowings, right? Similarly, like we just discussed, legal attorneys, the related parties, investments. Now, the balance which the entity may have shown and in respect of the recognition which the entity would have done, say in respect of debtors. There's one way to check that. What is that? You go look into the information which is available with the management. So you'll check invoices, you'll check various returns, okay, vouchers you'll check, PO you'll check, let's suppose agreements you have, you'll check. Maybe there are some working files, you'll check, right? Some of these things you'll go check. Okay. Now, in this case, If you look at all of this information, now there is one aspect about this information. What is that? It's all internal to the company. Yes or no? It's all internal to the company. So that's why what you want to check at times. So you want to check, let's suppose, is there any way you can also check that? Yeah. Now, one of the ways to check that, and which is actually considered to be more reliable from the perspective of the auditor, if you look at it, what is that? External evidence. So if let's suppose there's any way external evidence can be obtained, right? If let's suppose there's any way external evidence can be obtained, so what can you do? As an auditor, you'll always want to obtain that. Why? Because of course, this internal evidence which the auditor would have obtained will be important. Yeah, will be important. But on the top of it, the external evidence, if let's suppose is available to the auditor, that is always considered to be more reliable, right? So that's what the auditor is trying to check. That's what the auditor is looking into it. And one of these external evidence, and which is considered to be again a critical procedure in respect of these areas, happens to be what? Obtaining external confirmations directly from the third parties, right? Okay, so now as an auditor, what are you doing? You are obtaining those external confirmations directly from the third parties. Okay, so now let's look at it as to how do you go about it. So let me just share this document. So what's the process? What's the procedure you will follow? So say if we take an example of debtors, yeah. So let's pick up debtors. What's the first step you'll do? So the company has got 100 debtors. Means there are 100 parties who have outstanding balances at the year. Now, what is the objective of the audit? Auditor wants to obtain this external confirmation, basis which auditor will also get a comfort around what? Completeness. Means if let's suppose, say there is a party A Limited which has a debtor. Now the company has shown receivable of rupees 10 lakhs. And let's suppose the debtor has also shown a payable of 12 lakhs, sorry, 10 lakhs in its books. Now, if both of them talk to each other, they are able to reconcile, they are able to check, verify. so that anything which is there in respect of this debtor doesn't get missed out. Yes or no? Now, in this case, what will happen? Now, in this case, for obtaining this confirmation, auditor will get involved. Now, on the part of the entity, now you may be saying, but isn't it a requirement on the part of the entity wherein they may go and check this, yeah, and wherein they may want to look into, or maybe isn't that really a process on the part of the entity to look into? Of course, so that's a process. You'll get to see that thing as a process, of course, on the part of the entity. But over and above that, now the auditor will get into a confirmation process. Now, as a first step, what will happen? Auditor will select a sample, go to the management, ask them to confirm. This is the list I want to roll out, wherein the management will provide the confirmation on their letterhead. Yeah, signed by the management only, right? But those will be rolled out by the auditor directly to the debtors, asking them to respond. And respond directly to the auditor. Now, in this case, what is the role of the management? Coordination. That's it. So, are they involved in obtaining this? Means, will they be receiving or should they be receiving? Answer is no. This has to be independent. This has to be direct. Yeah. And that is where its reliability becomes, you can say, higher as compared to what you will have otherwise. Because the management may have obtained confirmations from the debtors. Maybe it's a quarterly exercise for them, annual exercise for them. But if let's suppose you obtain them from the management, yeah, so its reliability will always be lesser, right? Now there again, there is a complete procedure which will follow. We'll go ask the management. Management will then provide those letters. You send them to the debtors, and you send to the debtors in hard copies to begin with. Okay. Now, what if the debtors don't respond? What do you do? Reminder. Yeah. What if they don't respond despite the reminder? Again, you will send the reminder. Okay. So the reminders you'll have to send. Okay. Basis which they will respond or they should be responding. Yeah. Now, sometimes what may happen is, let's suppose they respond. Now, there could be a situation, say the debtors have responded. So the company is showing 10 lakhs. Debtor is responding, and the amount which is appearing in the books of the debtor, let's suppose, is 8 lakhs or say 12 lakhs. Now, what do you do? Yes or no? Now, what do you do? How do you go about it? Correct? That could also be a consideration. Right? Now, in such a case, what will the auditor do? Auditor will again go back to the management, show the confirmation which has been received, and ask the management to explain. So basically, it's all about reconciling that. Yes or no? So in such a case, what do you do? These two items may have to be reconciled. Maybe the differences which are there, they have some reasons. Okay, they have some logical reasons. So it's not about an error. So actually, these differences are not because of the misstatement. They are for some valid reasons. So once the management is able to provide, these reconciliations will then be audited by the auditor. So auditor will examine that, verify that, understand that. Okay, right? Another situation which may arise. Say auditor is asking the this is auditor. Auditor is asking the debtor to respond. Reminder 1 sent, reminder 2 sent. Again, the number of reminders. Again, if you look at it on the basis of the practicality which is involved, what may happen is at times, because of the timeline which is involved, so the auditor will have to assess as to how many reminders can be sent, and is there any way that auditor will continue on hard copies, or maybe the emails are all rolled out, and practically the auditor may also request the debtors to maybe respond through email as well, but directly to the auditor. Okay, at times they can mark copy to the management, but of course it has to be directly sent to the auditor. Yeah. So now, say all of these things have been done, right? And let's suppose 40 parties were selected. Out of 40, say 30 have responded. 10 didn't respond. Possible? So now what do you about that? Do you do about that? So do you keep waiting? Because audit will always have a timeline, so you can't just keep waiting. 1 month, 2 months, 3 months, you can't just keep waiting. Yes or no? So how do you go about it? What do you do in such a case? So that's where the standard says alternate procedures will be required. So sometimes a question arises that should we not jump onto the alternate procedures straight away? Why to get into this complication, this entire process? Maybe quite complicated. Why? Because a lot of coordination may be required, and this may become quite cumbersome, right? Considering the audit timelines that you will generally have. Yeah, these days, if you think about it practically, it's too difficult for the auditor to manage these challenges along with the challenges related to audit. So should we get on? Should we get on to the alternate procedures directly, immediately? The answer is no. Okay. So that's not the auditor should do immediately. So of course it has to be sequential. So first of all, the auditor should try performing these procedures. When the parties are not responding, okay, only then the auditor will get on to the alternate procedures. Now, in terms of the alternate procedures, what will the auditor do? Auditor will verify the underlying invoices which are in relation to the build-up of the debtor's balance. Okay, and in terms of those outstanding balances which are there, say if you talk about this example we have taken. So as at year end, say 31st March 2026, The balance is 10 lakhs. Now the built up, which may be pertaining to this reporting year ended or which may be pertaining to the previous period. So the built up, auditor will have to check in terms of the invoices. Plus, subsequent collections, maybe by the time the audit is wrapped up, subsequent collections may have been uh, received by the auditor from these parties. So auditor will also want to check those subsequent collections, yeah, as to whether those have been received or not. If let's suppose the money is received, so of course the auditor will have a comfort in terms of the you can say the balance which is there, which is appearing in terms of its valuation and in terms of any provisioning, if at all, that is required to be made. Right. Now, let's suppose this 10 lakhs has a built up and it involves say 20 invoices. Now, sometimes there's a concern that in respect of these parties which do not respond, let's suppose there are 15 parties, they are not responding. So if we get on to each party, get on to these alternate procedures, so the subsequent collection can be, you can say, quite straightforward, may not be so time consuming at times. But when you talk about this entire built up to be checked as to how this has been generated and which has been appearing in the financial statements as at the year end. So should we then get on to a selective approach wherein we select the sample around it? Answer is no. Why? Because please understand that when we started off, yeah. So what had happened? We selected a sample. Out of 100, what did we do? 40 was the sample we selected. Now, sample of sample you can't select. Where do you select the sample? In the population. From the population you select. But don't select the sample of sample. Right? So that's an important part for you to look at. Okay. Yeah. Grab this. Now, as we discussed, when you look at certain items in the financial statements, say debtors, trade payable, okay, creditors, similarly banks, borrowings, creditors, related parties. That's something we are also going to talk about in a bit more detail. For their completeness to be ensured, this external confirmation becomes an important procedure. Plus, of course, as we discussed, getting an external confirmation will always be considered to be a more reliable audit evidence. More reliable. So, of course, we are not saying that if you are doing this, so all other evidences like invoices, vouchers, okay, all of these. So that doesn't mean you will not accept this. Of course, you will be required to obtain those as well. But on the top of it, this external evidence that you obtain will give you more comfort as an auditor. Yeah, so that's why for these areas, this particular procedure is always required to be done. So it's not something that you'll think through whether we perform or not. Yeah. So you'll always see this procedure being performed. Now comes the point, when do you perform this procedure? Now there again, what is the balance you are looking at? Balance sheet. That's the balance you're looking at. So that's why, which are the balances that you will want the other parties to confirm, or you can say external parties to confirm? 31st March. Yes. And for which, of course, this exercise, this preparation may start and this rolls out after 31st March. And then, of course, you'll have a time frame. But in terms of some of the large organizations and wherein the controls are a bit strong, wherein this quarterly exercise may also be going on. Why? Because they happen to be listed. So every quarter, some reviews or the audits are performed. Okay. And which may also be working on very stringent timelines in terms of the financial reporting requirements. So therein again, the auditor will have to assess on the basis of the entity, on the basis of its structuring, on the basis of the audit approach, and the risk involved, of course. Because at times, what do you find that instead of picking up these balances in terms of, say, 31st March for the confirmation, auditor may pick up, let's suppose at the time of pre-audit, say, they have frozen the financial statements up to Feb 2026. Let's suppose this is the period they have frozen. Okay. Now, for this period which they have looked at, which they have covered. So that's something they may want to confirm instead of going with this. And of course, if let's suppose they select any period which is prior to 31st March, so what do? They will then be required to perform the roll forward procedures. Something similar to what we discussed earlier when we talked about that physical verification as well. Yeah. So now, this is not something you will find in all the cases, but in some of the cases you do find this. Why? Because as we just discussed, that some of the practical challenges may be involved. Maybe the company is working on quite stringent timelines. Sometimes you look at the companies which have a, let's suppose, eventually financial reporting or deadline, say, of 12th of April. Now, within this very short window, how do you complete the audit, particularly some of these procedures? Because to roll out the confirmation, and when you have a dependence on a third party for the third party to confirm, so how do you ensure that the third party has actually confirmed that? Yeah. So that's why some of these considerations may become important in such a case, right? So that's why in some of those cases, you may actually want to go this way, and which is absolutely fine. Huh? So that's where, again, as we discussed, you see the companies doing this, right? But again, any approach that you follow, some of these considerations you'll have, all of these will always be something which the auditor will have looked at the time of his planning. Okay, the audit plan which would have been performed. So that's where the auditor would have considered all of these, right? So now with this, I think what we can now do is we can just take a break, and once we are through with the break, we continue then. Huh? Sure. All right. So now moving on to the next one. Okay, so now as a next step, so what we can do is this audit sampling and related parties, of course, as we discussed. So this is also required to be, of course, in terms of the testing procedures, we understand what is required, but external confirmations will have to be performed in respect of related parties as well. And when you talk about opening balances, now let's try to understand about the opening balances. So in respect of the opening balances, now what do you do? How do you really go about it? Okay, right. So in terms of the opening balances, what you can do is, as an auditor, when you are appointed as the auditor, say for a company, okay, and this was audited by, say, some other auditor, and now because previously the financial statements, which are going to be the comparative year, let's suppose it's 26-27 that you are going to audit, and previously let's suppose that was required to be audited by the previous auditor, and who's done the audit for 25-26. So that's why it will form part in the form of a comparative year. Yes or no? For the financial statements that you audit as well. Yeah. So now in that case, what will happen? In that case, the opening balances that you start with, they happen to be audited by somebody else. So as an auditor, you have not audited the opening balances. So now if you look at the balance sheet audit, wherein you are looking at the closing balances, if you look at P&L, means performance during the year, transactions which have taken place during the year, that's not actually covering the opening balances. So that's where the opening of audit balances is something that is required. Yeah. So if let's suppose you're a continuing auditor, that's where it's not required, because that's something you've already done, you have already performed, you have been doing year on year. But now it is required. Now it's required to be looked at, performed by the auditor, performed required by the auditor to look into. Okay. So now in this case, what will happen? Now in this case, the auditor will be required to get a comfort on the audit balances. Of course, see, this tracing is one procedure which you will perform. Means tracing of last year's closing balances to current year's opening balances. So that anyways is one of the procedures which you will perform. But on the top of it, you can say some of the closing balances which are there in the previous year, you'll want to get a comfort on, particularly in respect of those closing balances of the previous year which continue to be the closing balances or which form part of the closing balances of the current year. Why? Because for the reporting year, the closing balances that you have, you can say a built up of that is arising from what? Opening balances. So what if you don't look at the opening balances? So actually you have not audited that. You are just forward. You are just carrying forward that number as it is. Yes or no, that doesn't help. So that's why it's something you are required to look into, becomes an important part for the auditor to get involved. Okay. Now, in relation to some of these topics we have discussed, right? So what we will do is, in relation to this, let me just move on to the questions now. So we'll try to pick up some questions basis this. Okay. Yeah. Now, in this case, you are required to advise the auditor, okay, about what? How sufficient, appropriate. Now, in this case, couple of things. Sufficient and appropriate audit evidence regarding the existence and condition of inventory maintained. Now, as we discussed, for the existence and the condition, what's the only way to go about physical verification? That's the only. No other procedure will give you the comfort around this particular assertion existence. Next, how is an auditor supposed to deal when attendance at physical inventory counting is impracticable? Now, sometimes there could be some challenges. Say, for example, if you go back to Corona period, so that's when physical verification was not possible. Okay. So how do you deal with those situations? Because as far as the existence is concerned, so that's the only procedure which will give you this comfort. So how do you get this comfort then? Okay. Yeah. So let's look at this. Okay. Now this SA 501, this deals with audit evidence in relation to inventory. Now, inventory, as we discussed, you will generally find this significant in relation to the financial statements. And therefore, in relation to existence and condition, what do? Attendance at the physical verification counting. Yes or no? So this physical verification, unless practicable, you will do this. By doing that, what do? Basically, you evaluate the management's instructions and the procedures for recording and controlling the results of entities' physical inventory. Yeah. So that's one thing you will be able to find out. Observe the performance of, means when the management is doing the physical verification. So you are there to observe, okay, whether they have been doing this in an appropriate manner. Inspect the inventory, right? And perform test counts. Yeah. So you also inspect and test counts, because of course all the inventory you will not be able to verify physically, and you are also not required to as an auditor. Okay. You'll also be able to perform the audit procedures over the entity's final inventory records to determine whether they accurately reflect actual inventory count results or not. Okay. Next. Now, what if this is not practicable? Yeah, so let's suppose some of these requirements you want to follow. Yeah. But you find physical verification is not practicable. Okay, so how do you go about it? Now, as an auditor, what is the course of action? Because something you'll have to do to mitigate, okay, the risk which you are trying to address through this procedure. Now, in some cases, attendance at physical inventory counting may not be practical. This may be due to the factors such as nature of the inventory types, location of the inventory. Say when the inventory is held in a location that may pose threats to the safety of the auditor. Matter of general inconvenience to the auditor, however, is not sufficient to support a decision by the auditor that the audit attendance is impractical. So it's not about convenience. Yeah, it's all about what? It's all about impracticable situation. Now, as explained in essay 200, where we talk about objectives of the audit, conduct of an audit, matter of difficulty, cost, time is not in itself a valid basis for the auditor to omit an audit procedure for which there is no alternative or to be satisfied with audit evidence that is less than persuasive. And so you can't say that this is not comfortable, that's why I'll not do this. Yeah, so that's the point. So sometimes you may have to get into, say, a challenging thing, right? But of course, if that's a health hazard, so that's a safety concern, that's where the auditor may definitely be considering that. Further, where the attendance is impracticable, alternate audit procedures, for example, inspection of documentation of subsequent sale of specific inventory items acquired or purchased prior to physical inventory counting, may provide sufficient appropriate audit evidence about the existence and condition of inventory. Okay. In some cases, though, it may not be possible to obtain sufficient appropriate audit evidence regarding existence and condition of inventory by performing alternative audit procedures. In such cases, what will happen? Basically, auditor will have to evaluate if there is any limitation on the scope due to such a concern or due to such a situation which may arise. And if at all there is a limitation, so how will the auditor conclude that? So maybe there are some reporting implications. Yeah. So of course that may lead to some sort of modification in the audit report. So that assessment will have to be done by the auditor and accordingly you'll have to report. Clear? Yeah. Now, next one. GHK Associates. It's a firm of chartered accountants conducting the audit of TBS Limited, a listed company. So basically, it's the audit of TBS Limited, which is listed, and the audit firm is GHK. Okay, so now auditor is concerned with the presentation and disclosure of segment information included in the annual report. Right? So that's the concern. GHK wants to ensure that methods adopted by the management for determining segment information have resulted in disclosure in accordance with applicable financial reporting framework. Yeah. So guide GHK Associates with examples of matters that may be relevant when obtaining an understanding of the methods used by the management with reference to relevant standards on auditing. Correct? So now let's look at this. See, the auditor wanted to ensure and obtain sufficient appropriate audit evidence, right? Regarding what? Regarding the presentation and disclosure of segment information in accordance with applicable financial reporting framework by obtaining an understanding of the methods used by the management. Okay. Of course, when you talk about the segment reporting, it's the management which would have done the assessment, correct? Now the auditor should do what? First of all, understand that process fully. That process in itself will help the management understand this part, correct? Next. Now, SA 501 guides as regards the procedures to be performed. Okay, because it's again one of the, you can say, specific item which have been covered by that auditing standard. Okay. Now, what is the first thing you need to do as an auditor? Obviously, you will obtain an understanding, correct? Because this is one area which may have some peculiarities specific to the entity, specific to their internal structuring, specific to their internal reporting requirements, which will have an impact on presentation and disclosure of segment information. Yeah, as per the requirements of Ind AS 108, right? Now, when you obtain an understanding, that's when you get a clarity as to what the management has done, what all methods they've used, okay, for the purposes of reporting requirements. Yes or no? Yeah. Now some of the items which are included there, what do you have? You have this sales, transfers, charges between segments, elimination of inter-segment amounts. Yeah, so that's one thing you will have. Comparisons with budgets and other expected results. Say, for example, operating profits as a percentage of sales. That's the other thing you'll look at. Allocation of assets and costs among segments is again something you'll want to look at. Consistency with prior periods and the adequacy of disclosures with respect to inconsistencies is again something you'll want to look into. Yes or no? Yeah. So that's how you will go about it. Right? Now, moving further. So now we can just maybe bring in one page. Chintamani Limited appoints Chintan and Money as the statutory auditors. So what's the name of the company? Chintamani Limited. So that's the company, or you can say the client. And Chinta and Money are the statutory auditors. It's the financial year 25-26. Chintan and Mani seem to have different opinions on the audit approach to be adopted for audit of Chinta Money Limited. Okay. Money is of the opinion that 100% checking is not required. And he is basically talking about the sampling mechanism in order to provide them a reasonable basis on which they can draw conclusions about the entire population. Now, that's the concern of Chintan. Why? Because he is concerned whether the use of audit sampling has provided a reasonable basis for conclusions about the population that's been tested. Okay. Now, you are required to guide Chintan about his role if audit sampling has not provided a reasonable basis for conclusions about the population that's been tested in accordance with SA 530. Okay. Yeah. So let's look at this. If you look at the requirements of SA 530, basically in respect of audit sampling, auditor shall evaluate the results of the sample and whether the use of audit sampling has provided a reasonable basis for conclusions about the population that's been tested. Okay. Now that's the thing which the auditor is supposed to evaluate. Right? Yeah. Now, if the auditor concludes that audit sampling has not provided a reasonable basis for conclusions about the population that's been tested, auditor may request the management to investigate misstatements that have been identified and potential for further misstatements and to make any necessary adjustments. Okay. Or you can say tailor the nature, timing, extent of those further audit procedures to best achieve the required assurance. Okay. For example, in the case of test of controls, auditor might extend the sample size, test an alternative control, or modify the related substantive procedures. Okay. Yeah. The next. Moving further, moving to the next one. During the audit of Star Limited, a company engaged in the production of paper. Auditor received certain confirmation for balances of trade payables outstanding in the balance sheet through external confirmation by negative confirmation request. received certain confirmation. Okay. The approach was negative confirmation request. In the list of trade payables, the number of small balances, okay, except one, which is an old outstanding of 20 lakhs, for which no confirmation was received, right? So they are small balances. Now you are required to comment with respect to the auditing standards relating to what? Confirmation process. So basically it's about the confirmation process you'll follow in relation to what? Trade payable. And how to deal with non-receipt of confirmation, right? How to deal with non-receipt of confirmation. So how do you go about it in case you don't receive that? So the same process we discussed. So now let's understand as to how do you apply that in the given situation. Okay, so let's look at this. SA 505. Okay. Now, what is this negative confirmation request? So it's a request wherein the confirming party respond directly to the auditor only if confirming party disagrees with the information provided in the request. Okay. Negative confirmations provide less persuasive evidence than positive confirmations. Yeah, so that's the most important aspect one needs to consider. Okay. Failure to receive a response to a negative confirmation request does not explicitly indicate receipt by the intended confirming party of the confirmation request or verification of accuracy of information contained in the request. Okay. Accordingly, failure of a confirming party to respond to a negative confirmation request provides significantly less persuasive audit evidence than does a response to a positive confirmation request. Okay. Confirming parties also may be more likely to respond, indicating their disagreement with a confirmation request when the information in the request is not in their favor and less likely to respond otherwise. Okay. In the instant case, while performing audit of Star Limited, okay, now in the given case, what do you find? Auditors sent negative confirmation requesting the trade payables having outstanding balances in the balance sheet. Okay. And what happened? One of the old outstanding of 20 lakhs has not sent the confirmation on the credit balance. Now, in case of non-response, what do you do? Alternate procedures, which will involve what? Subsequent testing. Yeah. So the subsequent payments which have been made, correspondences from the third parties, which the company would have obtained, other records in respect of the purchases, the built up, such as goods received notes, Okay. Further, non-response for negative confirmation request does not mean that there is some misstatement as negative confirmation request itself. Is to respond to the auditor only if confirming party disagrees with the information provided in the request. Okay. Yeah. Next. Mr. Athar, while conducting the audit of Black Mountain Mining Limited. So it's the auditor, correct? So while conducting the audit of Black Mountain Mining Limited, which is involved in phosphate mining, decided to engage an auditor's expert to assess environmental liabilities, site cleanup costs. Black Mountain Mining Limited reappointed Mr. Aman as an independent expert for this task. For the past 5 years, management has consistently reappointed Mr. Aman. Okay. He calculated environmental liabilities for both completed mining sites and sites scheduled for closure in the near future, including provisions for cleanup costs. Management accepted his assessment. Okay. Now, Mr. Atharv, after performing the inquiries with the management, was of the opinion that objectivity of the independent expert cannot be questioned just because he was appointed by management as their expert. Right? Hence, there's no need to raise a question on the objectivity of Mr. Aman or on his work performed for the company. However, the audit partner was of the opinion that audit team needs to evaluate objectivity of an expert engaged by the entity, irrespective of the fact that he was appointed as independent expert. Okay. Now, you are required to guide the audit partner and Mr. Athar with respect to the requirements pertaining to evaluating the objectivity of management expert. Yeah. So let's look at this. Now, when you talk about SA 500, when information to be used as an audit evidence has been prepared using the work of management's expert, the auditor shall, to the extent necessary, having regard to significance of that expert's work for the auditor's purposes, evaluate what? First, competence, capabilities, and objectivity. Obviously, these are the, you can say, fundamental requirements, kind of. Yes or no? A broad range of circumstances may threaten objectivity. Now, what are those? Of course, self-interest threat is one. Advocacy threats, familiarity threats, self-review threats, intimidation threats. Okay. Safeguards may reduce such threats and may be created either by external structures, say for example, management experts profession, okay, right? Legislation or the regulatory requirements you'll have. or by the management's expert work environment. For example, quality control policies you may have. Yeah. Although safeguards cannot eliminate all threats. Threats such as intimidation threats may be of less significance to an expert than to an expert employed by the entity. And the effectiveness of safeguards such as quality control policies and procedures may be greater. Okay. Because the threat to objectivity created by being an employee of the entity will always be present. An expert employed by the entity cannot ordinarily be regarded as being more likely to be objective than other employees of the entity. Okay. Now, when evaluating objectivity of an expert by the entity, it may be relevant to discuss with the management. And that expert, any interests and relationships that may create threats to experts' objectivity, any applicable safeguards, including any professional requirements that apply to the expert, and to evaluate whether the safeguards are adequate. Okay. Interests and relationships creating threats may include first, financial threat interests. That's one. Okay. Business and personal relationships, right? Provision of other services. Okay. Yeah. In the given scenario, what do we have? In the given scenario, Black Mountain Mining Limited reappointed Mr. Aman, right, as an independent expert for this engagement. Okay. Audit team was of the view that objectivity of independent expert cannot be questioned just because he was appointed by management as expert. However, audit partner had a contrary view. Hence, audit team should evaluate objectivity of an expert. So no. Created by being an employee of the entity will always be present. An expert appointed by the entity. Now there you go. Expert appointed by cannot ordinarily be regarded as being more likely to be objective than other employees. As a result, audit partner Atharv is correct in his view. Okay. Now, moving further. While conducting the statutory audit of Tasty Foods Limited, CA Careful has planned attendance at physical inventory count of the company from 29th March to 31st March. For 3 days. Company is engaged in the business of extracting rice from paddy grains and caters to domestic as well as international market, particularly in Gulf region. Okay. It has its plant spread in an area of about 20 acres located in NCR. Paddies contained in jute bags of nearly standard sizes is purchased from dealers, agents. It is stored in heaps on pallets. Pallets are a kind of, you can say, wooden structures. in an open area covered by protective sheets and in steel silos. Silos are basically huge steel containers with measuring train gauges within the company's premises. Okay. Company mainly produces three rice brands: Raja and Shahzada. So these are the one for the domestic market. Okay, for domestic, and Badshah is for the international market. Process of obtaining rice from paddy consists of various steps like cleaning of paddy, removing outer husk from the paddy grains to obtain brown rice, then whitening, polishing, grading, sorting, packaging, which is accomplished by means of various types of machineries installed in the plant. Yeah. Company's management has prepared a set of instructions and the procedures to be followed for recording and controlling results of company's physical inventory counting, which are listed as under. Now, what are those? So basically, it's a set of instructions and procedures. Okay. Now, what do you have there? Physical inventory count process is to be supervised by a responsible officer of the company responsible for storage functions. Number two, there should be no disturbance to the routine process of receiving goods and dispatch during the counting time period. Number three, counting process is to be undertaken by constituting different teams of 3 members each for counting, verifying raw material, WIP, finished goods. Paddy in steel silos is to be estimated using their capacity. Quantity of WIP is to be estimated considering plant capacity as a. Okay. The responsible officer should ensure that the stocks have been counted, verified, okay, in all areas. Now, before proceeding to attend the physical inventory count process of this company, evaluate these instructions of the management which we just discussed and the procedures sent to CA careful as stated up. Okay, if at all any modification is required, addition, removal of instructions, yeah, to make this entire process more effective, you should suggest that. Yeah. So let's look at this. Okay, so now moving further. Yes, there we go. So the set of instructions given over here are incomplete. So they appear to be incomplete. Not properly followed. Okay. Now what are those? Physical inventory count process should be supervised by a responsible officer of the company, preferably from finance department. So that's one. Supervision of the count process should not be done by a person responsible for storage function. Okay. However, Storage in charge of each area should be present during inventory count process for coordination and facilitation. Okay. During inventory count process, inward and outward movement of goods should not be allowed, as allowing such movement may distort the results or make it difficult to arrive at proper results. Yeah, so that could also be one of the things. Yeah. Instruction related to constitution of teams for counting process does not specify that counting shall be undertaken by members drawn from departments not connected with storage function. For example, these members may be from finance department. Further, within each team, duties should be fixed separately for counting and recording on serially numbered count sheets. So that should also be done. It is nowhere stated that once the counting in an area is complete, certain distinctive marks or the tags are required to be put. Okay, next. Count sheet should contain description of products in accordance with inventory records of the company. Management's instructions are silent about how the team members would proceed with their work. Team members should be provided with layout plans for different sections, storage areas, so that all areas are covered. Management's instructions are silent on how the paddy lying in open is to be counted and verified. Right? Paddy in jute bags, which is lying in open in heaps, should be verified by counting the number of bags in each heap. Because if you look at each bag, that's nearly the standard size. So the quantity can be determined by counting the number of bags and correlating it with the weight. Yeah. So in fact, that's how you do the physical verification. You don't do each, you can say, sort of line counted. Paddy in steel silos should be determined using measuring strain gauges on silos. Determining quantity in silos based on silo capacity may lead to wrong results, as paddy may have been used from such silos. Yeah. Quantities of WIP should be estimated at each stage of production and not for the plant as a whole. Estimating WIP inventories for plant as a whole would give inaccurate picture of WIP inventories. Okay. FG inventories need to be counted category wise. Rice bag should be verified by checking the name of the brand. There is no instruction further regarding damaged or obsolete stock items, particularly for finished goods. Yeah, damaged or obsolete inventory should be counted and shifted to a separate area for assessment of their condition and to prevent a mix-up with other standard inventories. Count sheets need to be signed by each team member. Responsible officers should ensure what? Stacks have been counted, verified in all areas, and distinctive marks are put to confirm the completion. Right? Okay. So now moving further. Yeah. During the audit of financial statements of Lux Limited for the year ended 31st March 26. So that's the company. CA Suyesh, who is the statutory auditor, requested external confirmation for certain trade receivables and trade payables. Okay, statutory auditor requested external confirmations for certain trade receivables, trade payables, right? Now, CA Suyesh sent a confirmation request to a debtor for a balance of 15.5 lakhs, which was outstanding for more than 6 months, insisting him to respond directly to the auditor, confirming whether they agree or disagree with the balance stated. Yeah. So that's one. He also sent a confirmation request to a creditor with an outstanding balance of 13.25 lakhs, requesting a response only if there was a disagreement with the stated amount. Okay. CA Suyesh received the responses from the above mentioned debtor and the creditor in the following manner. Debtor confirmed as per their records they owed 14.9 to Lux instead of 15.5, which are there in the books of the company. Creditor didn't respond. Yeah, which is something we discussed, which may happen. Now, in this case, identify and explain type of confirmation request sent by the auditor to the debtor and the creditor. Also, discuss the course of action auditor should take for discrepancy in the confirmation received from the debtor and non-receipt of confirmation from the creditor. Okay. Yeah. Now, let's look at this. Positive confirmation request. So we also looked at negative confirmation request. Now we are talking about the positive confirmation request in this example. Now it's a request wherein the confirming party respond directly to auditor, indicating whether the confirming party agrees or disagrees with the information in the request or providing the requested information. Okay. Now exception. What is the exception? A response that indicates a difference between information requested to be confirmed or contained in the entity's records and information provided by the confirming party. Yeah. So the exception needs to be assessed to the entire population after analyzing the difference for such, sorry, the reason for such difference. Obviously, so that's something which will have to be done. Yeah. In the given situation now, if we look at auditor has sent positive confirmation request for 15 lakhs and which has been outstanding for more than 6 months. However, due to the difference between information requested to be confirmed or contained in entities records and the information provided by confirmed, so that's a situation which is related to exception. Yeah, so that's a exception type of situation. Auditor's evaluation, when taken into account with other audit procedures the auditor may have performed, may assist the auditor in conducting whether sufficient appropriate audit evidence has been obtained or whether performing further audit procedures is necessary, right? The company should be asked to investigate and reconcile the discrepancy indicated by confirming party. Negative confirmation request. Now let's talk about it. A request that the confirming party respond directly to the auditor only if. And now in this case, confirming party responds only if the confirming party disagrees. So if they don't respond, it should assume that they are agreeing. That's why it's called as negative confirmation. In the given case, auditor has sent negative confirmation request for 13.25 to a creditor. Now, when should the creditor respond? When the creditor disagrees. If the creditor is in agreement, does he need to respond? No. Yeah. So if the creditor has not responded, should that be considered as an exception? Okay. Clear on this? Yeah. So now let's look at the next one. PQR Limited is engaged in the business of construction and real estate, having various projects across the states. Okay, so basically they are in the business of construction and real estate. Messer ST and Company Chartered Accountants have been appointed as statutory auditors. Okay. CAT, who is an engagement partner, who leads the engagement team during preliminary verification, identified a few agreements entered by PQR for the provision of services to some parties under the terms and conditions that are outside the normal course of business. Now, this is suggestive of indications about existence of related party transactions, which have not been disclosed to the auditor. Okay, so that seems to be the case. So you can say it's a risk. Yes or no? It's a risk. Highlight the aspects that ST and Company shall consider on identification of previously undisclosed related party transactions with reference to relevant auditing standard. Okay. Now, let's talk about this. So as per SA 550, now what do you have? Which is in relation to the related parties. ST and Company means the auditor should take following steps upon identifying previously undisclosed related parties. See, when you talk about related party transactions, this area in itself has been discussed as very critical. Now, for an auditor to go verify may still be easy, because if let's suppose the auditor has to check, so they need to look at the evidence which the management will provide. But when it comes to the completeness, means to identify, that's where the real challenge lies. Okay, so that's the most important aspect for the auditor. Now, verify whether the circumstances substantiate the existence of such transactions. Okay. ensure timely communication of relevant information to all members of the engagement team, confirm appropriate substantive audit procedures have been conducted, inquire why entities controls failed to identify or disclose related party transactions, carry out substantive audit procedures specifically for these newly identified related parties or significant related party transactions. Reassess the risks. Yes or no? Which might be there in relation to the other related parties. Request the management to identify all transactions involving newly identified related parties. Yeah. If it appears that the management intentionally didn't disclose, then evaluate that in terms of the impact which is there on the financial statements and report accordingly. Correct? Now, let's look at the next one. ABC Limited is in the business of manufacturing of iron ore and steel bars since last decade. Okay. Company is having its registered office in Mumbai and factory in Bhiwadi. Messrs. R and Associates are appointed as statutory auditors of the company. So basically, the registered office Mumbai, factory in Bhiwadi. R and Associates are statutory auditors. 25-26. While going through the trial balance of the company, they observed company has 50 customers, 40 vendors. These are the debtors, these are the creditors. Okay. They requested the company to authorize them to send the external confirmation to few of its customers and the vendors. Company immediately provided them an authority letter to send the external confirmation to their customers and the vendors. Auditor then sent the positive confirmation request to top 3 customers, top 3 vendors only. Yeah. After 2 days of sending this confirmation request, which was positive, management handed over to them duly signed response received from respective customers and the vendors, even though the confirmations were sent to those parties directly. Now, how would R and Associates proceed in the given situation? Yeah. So something seems to be fishy, definitely. Yeah. How come the management received everything? Yes or no? Now, SA 505 is the one that we need to now look at. It states if the auditor determines that a response to confirmation request is not reliable, auditor will of course look into the risk assessment. Yeah. Now, if you look at SA 500, it indicates even when audit evidence is obtained from sources external to the entity, circumstances may exist that affect its reliability. Okay. All responses carry some risk of interception, which is evident also, alteration or fraud. Such risk exists regardless of whether a response is obtained in paper form or electronic or other. Yeah. Factors that may indicate doubts about reliability of a response that include that it was received by the auditor directly or it appeared not to come from the originally intended confirming party. Okay. Now, in the given case, there are 50 customers, 40 vendors, and confirmations have been sent out to top three. After 2 days of request, management handed over duly signed response. Yeah. Now, considering the fact that response was received by auditor indirectly, so auditor should have received directly, but it was routed through management. It raises questions on the reliability of response received and indicates fraud risk. See, the independence is something which you need to have. If the auditor has doubts about reliability of these responses, it becomes necessary to obtain additional audit evidence. Yes or no? Obviously, because that's the risk factor which is in relation to the fraud. Auditor should also reassess risk of material misstatement. Automatically that will come, including the possibility of fraud, which seems to be quite strong scenario, and accordingly design further audit procedures. Okay. Now, let's look at the next one. Statutory audit of Niswas Pharma for the financial year 25-26 is underway. Means audit is going. During the review of professional legal fees, engagement team noted significant payment to high-profile law firms specializing in intellectual property disputes. Management during the initial inquiry stated that payment was for general advisory services and no active litigation exists that requires a disclosure under applicable financial reporting framework. However, minutes of the board meeting from February 26 hint at a potential significant patent infringement claim from a global competitor. Yeah. Engagement partner, now in this case, who's the engagement partner? C. Rukma, insisted on sending a letter of direct inquiry to external legal counsel to assess probability of outflow of resources. Management refused to permit, citing confidentiality. So management says no, you can't do this. It is something which is confidential. Okay. Now, they have offered to provide comprehensive written representation confirming no material litigations are pending. C. Rukma is concerned about management's stand and non-availability of direct confirmation from the lawyers. Now, is the management's written representation sufficient in place of legal confirmation? Advise C. Rukma about additional audit procedures. Okay. Reporting implications if legal confirmation is denied. Yeah. So let's look at this. When you look at SA 580, written representations, It talks about auditors' responsibility to obtain written call representations from management and TCWG wherever it is appropriate. Although written representations provide necessary audit evidence, they do not provide sufficient appropriate on their own. They are not conclusive. It's not a conclusive evidence. The fact that management has provided reliable written representations does not affect nature or extent of other audit evidence. Okay. Now, if you look at SA 501, which talks about specific items to be audited. Now, it's a matter of material litigation or claim. Okay. In which case, auditor will do what? Obtain confirmation, direct confirmation with entity's legal counsel. Yeah. And the same process of confirmation in this scenario as well is gone. In the given situation, significant payment to an IP litigation law firm references in board minutes to a possible patent infringement claim. Management's refusal to allow direct communication with legal counsel. Okay, so three things. Huh? 1, 2, and this indicates significant auditors. As the matter may involve contingent liability requiring disclosure of provision, she should not rely only on management expectation. That's okay. Refusal to permit direct communication with the management expert, sort of, you can say, legal counsel, is a significant audit concern. So it's basically more of a limitation scope. Here again, what will happen? One will have to get into the reporting implications. Yeah. So one of the procedures, inquiry of management, including in-house legal counsel, reviewing the minutes with TCWG in respect of TCWG meetings, reviewing legal expense account. Yeah. So CA Rukma should express modified opinion in this case. Yes or no? Yeah. So let's look at the next one. Evershine Refineries has recognized substantial provision with respect to decommissioning, environmental restoration, etc. So basically, of course, it's a provision, so there will be complex assumptions, long-term discounting, estimates, evolving environmental compliance costs. So a lot of subjective matters are involved. Company relied on technical assessment prepared by CTO, who is a qualified environmental engineer, right? Based on internally developed operational efficiency measures, CTO's report recommends 15% reduction in provision. Now, during the audit, what has happened? CA Meera identified provision as a significant matter due to significant estimation uncertainty. So it's a significant risk for the auditor, right? Although CTO possesses relevant technical competence, CA Meera has noted CTA's performance incentives are linked to company's profitability targets. Audit team doesn't possess specialized engineering expertise, so they will need the auditor's expert, clearly. So analyze the case and guide CA Meera whether to rely on CTO's recommendations or not. Okay. So next, let's look at this. Now, in the given case, what has happened? Company reduced the provision by 15%, okay, which is based on technical assessment prepared by its internal CTO, which is an emerging expert. Since the provision involves significant estimation uncertainty, materially impacts profitability, plus the most important point, CTO's incentives are linked to profitability. So there's a risk about what? Management bias, clearly. Yeah. Which will affect what? Objectivity. Yes or no? Yeah. Now, in this case, what do you do? The work of the management expert will be required to be audited. Yeah. So now, what do you do in respect of that? What do you go and check? Competence, capabilities, objectivity of that expert means whether the person was fit to do the work or yes or no. Obtain an understanding of the work of that expert. Evaluate appropriateness of that works. Why? Because that will form part of the audit evidence. Yes or no? So discussion, some of these things will be required. So auditor may obtain information regarding competence, capabilities, objectivity from variety of sources. So these days you Google, on LinkedIn you go, you can check that. So such as personal experience with previous work, discussions with that expert, discussion with others. Yeah, all of these you can just go and check easily. Further, aspects of management's expert field relevant to auditors' understanding may include what assumptions and methods are used by management expert. Okay, whether they are generally accepted within that expert's field and appropriate for financial reporting purposes or not. Yeah. So these are some of the things one will have to consider while looking into it. Yeah. So with this, we are through. And once again, thanks everyone for your time. And we can just close our discussion now. Okay. Ashok, we can close this now.